joining us this morning, BMO Chief Investment Strategist Youngyu Ma. It's great to have you back. What do you make of, I mean, we've been reading hunker down memos in big tech for a while now, getting more granular. How does this move the needle in terms of investing strategies?
Well, there's definitely still a lot of macro uncertainty out there. We are expecting earnings cuts into Q4. We are expecting probably ongoing declines in ad spend. So it does make sense to have stability in the portfolio. And as you mentioned, where do you find stability? You look to the companies that have proven to really be able to weather just about anything you can throw at them. And Microsoft and Apple have really fit that bill. So we think of those as core holdings, sort of the big two, if we want to throw away the other acronyms, but also looking to really nibble and very selectively nibble on early cycle semi plays, but really focusing on where the end markets remain strong. So high selectivity, but keep stability in the portfolio through these proven winners, but also through the areas of cybersecurity, where that's very much still top of the stack spending for most corporations.
How does that tie in with last week's bounce in tech related to CPI and the downward tick in yields, especially now that we're getting some Fed speakers suggesting that maybe the market took it a little bit too seriously, this one print?
Yeah, that's right. It was 1 month's data print. We did have Fed Governor Waller out over the weekend talking about really there's still a lot that the Fed needs to do that remains. And last week there was a lot of fear of missing out. There was a lot of short covering. There was a lot of enthusiasm. But I think this week we're seeing more sort of digesting the move, really thinking about where we're headed. And that two-pronged approach of maintaining stability in the portfolio while maybe nibbling early cycle, we think makes a lot of sense here.
Hey, Youngyu, it's Deirdre. Good morning. You mentioned cybersecurity as an area of tech that has remained resilient, but you could argue some of the cracks are showing, at least in terms of the stock prices. Can they really be immune from a spending slowdown? Do you expect that to continue in the months and quarters ahead?
I don't think they're completely immune, but we do want to think about in the space, there's probably going to be consolidation. So you probably do want to focus on the broad platform players that even if there's a little bit of a slowdown, we don't expect much, but even if there's a little bit of a slowdown, they can sort of gather sales and customers from other areas because they're a broad-based platform. We do think companies are going to want to consolidate a bit. So we think it's still a very safe area to be. There has been a pullback, but if you focus on the broad platform companies, we do think that plays out well over time.
Youngyu, so much attention we've been paying to inflation and the Fed when it comes to stocks. I wonder if we might have taken our eye a little bit off the ball when it comes to the core economy. I mean, there's this weird moment that we're having where Jeff Bezos, the founder and executive chairman of Amazon, is saying, maybe don't stretch and get that big screen TV. Amazon just started selling its own big screen TVs that are under its brand about a year or so ago. And they had a second Prime Day this year, seemingly trying to get the consumer to spend. But now he's saying, yeah, you know, maybe not. Things are tough. And as a matter of fact, it looks like they might be laying off some people in their division that does devices and services. Could this be bigger storm clouds on the horizon of consumer spending, which drives so much of the economy? And should we be thinking about that from a macro and stock moving perspective?
Well, that's a great question. We do think we're at an inflection point. We do think the hyper focus on the Fed that's really been driving the markets this year is probably right in the process now of shifting to a focus on the economy and how much the impact of interest rates and the slowing economy is going to impact consumers